Welcome to Skytech-Lens. For generations, Canada's prairies have been defined by the golden fields of canola, a $43 billion industry supporting over 200,000 jobs. From Saskatchewan farms to Alberta and Manitoba processing plants, canola is woven into the fabric of the Canadian economy. China, Canada's top canola customer, imported nearly $5 billion worth annually by early 2024, making it the lifeline for many prairie farmers. But this profitable dependency carried a hidden risk. In August 2024, after Canada imposed tariffs on Chinese electric vehicles, Beijing retaliated. The world watched as China struck back, imposing a crushing 75.8% anti-dumping duty on Canadian canola seed. The move was swift and devastating, slamming shut the gateway to Canada's biggest market. For thousands of Canadian families, the future suddenly looked uncertain. The partnership dissolved overnight, leaving farmers staring into an abyss of crisis. The canola industry, once a symbol of steady success, now faced its greatest threat. A storm had arrived on the prairies and no one knew what would come next. The 75.8% tariff hit the prairies like a gut punch. Farmers, just finished planting their spring seeding, faced the terrifying prospect of having nowhere to sell their crop. ICE canola futures plummeted, and the mood turned grim. A February 2024 survey revealed 61% of canola producers feared bankruptcy within a year if the Chinese market stayed closed. These were family farms, not faceless corporations. Generations invested in the land, now threatened by distant politics. The entire canola value chain, seed suppliers, equipment dealers, transport companies, was at risk. With 90% of Canada's canola grown in Saskatchewan, Alberta, and Manitoba, the regional impact was projected to be devastating. Infrastructure built for China-bound exports ground to a halt, with silos overflowing and loans coming due. In March 2025, China expanded tariffs to canola oil and meal, confirming this was a campaign to cripple the sector. Hopes for a quick resolution faded. The industry was on its own, its survival hanging in the balance. The question: could Canadian farms withstand such a monumental shock? As panic spread, Ottawa acted fast. The government unveiled a $2.5 billion emergency aid package, price stabilization, surplus management, and direct financial support for struggling farms. This lifeline kept operations afloat and prevented a market collapse. In September 2025, another $370 million and increased interest-free loan limits gave farmers breathing room to adapt. The message was clear: Canada's canola industry would not be left to fail. This robust intervention bought precious time for the private sector to regroup. It stabilized the industry, allowing for new strategies and market exploration. The government's swift action laid the foundation for a remarkable comeback. The fight for canola's future had begun. With government support in place, Canada's canola industry pivoted with urgency. Farmers and exporters launched an aggressive campaign to find new markets. Within a single quarter, exports to other countries surged by 27%. Europe, drawn by non-GMO canola, became a key focus. Exports to the EU jumped from $780 million to $1.3 billion in a year. In Asia, Japan increased canola oil imports by 21%, with South Korea and Vietnam following suit. Markets once considered secondary became vital lifelines. Canadian exporters forged new relationships, highlighting quality and reliability. The industry's agility turned crisis into opportunity. The great pivot was underway, proving Canadian canola's value extended far beyond China. Diversification was no longer a goal, it was a necessity. The industry was writing a new chapter. The real engine of the canola comeback? Small and medium-sized businesses. In BC, a cooperative of 47 families launched their own premium canola oil brand for Europe, tripling sales in 6 months. In Alberta, a family-run facility shifted from bulk oil to consumer-ready bottles for South Korea, capturing higher margins and building a brand. Saskatchewan entrepreneurs turned canola byproducts into biodegradable plastics, attracting green investment from Europe. Across the prairies, innovation flourished: gourmet oils, protein isolates, and new materials. The crisis forced a move up the value chain, away from raw commodity exports. Grassroots ingenuity built a more resilient, profitable sector. The future of canola was being shaped by bold local ideas. Diversification paid off. Canadian canola found eager buyers worldwide. Despite China's collapse, exports elsewhere surged by $5.6 billion in early 2025. Total exports hit a record $13.2 billion in 6 months, with the sector on track for $16 billion by year's end. A new driver, global demand for renewable biofuels. Countries like Indonesia and Thailand placed massive orders for canola-based biodiesel, adding $2 billion in projected annual exports. Canadian canola's reputation for quality and reliability became its greatest asset. Buyers in Japan, Europe, and the US trusted the Canadian supply chain. The world had opened its arms to Canadian canola. While Canada rebuilt, China faced the fallout of its own trade war. Beijing struggled to replace Canadian canola. Other suppliers were unreliable, expensive, and lower quality. Domestic cooking oil prices in China soared 18%, fueling food inflation and public frustration. Biofuel producers reported shortages and project delays. The tariff, meant to punish Canada, ended up hurting Chinese consumers and industry. China's supply chain vulnerability was exposed. The lesson: in a global economy, aggressive trade actions can backfire. Canada's resilience became a case study in adaptation. China's gambit had failed. The crisis didn't just save canola, it transformed the industry. Forced diversification led to new jobs and investment in value-added products. A $350 million processing plant in Regina created 600 jobs, producing canola protein for global food giants. Canada became a key innovator in plant-based foods, not just a commodity supplier. U.S. buyers increased purchases, citing quality and stability. The industry's reliability became a major advantage, attracting further investment. Canada's canola sector emerged stronger, smarter, and more competitive than ever. Canada's canola comeback is a story of triumph over adversity. Government, industry, and entrepreneurs united to turn crisis into opportunity. The key lesson: diversification is essential. Over-reliance on one market is a vulnerability. By expanding exports and developing new products, the sector built a foundation for future stability. Innovation and adaptation defined the response. Cooperatives, startups, and value-added products led the way. Canada's greatest resource proved to be its people's ingenuity and resilience. The $16 billion turnaround preserved family farms and created new jobs. It strengthened the national economy and set a global example. The canola comeback of 2025 will be remembered as a defining moment. Canada faced a storm and emerged stronger, more confident, and ready for the future. Thanks for watching. Subscribe the channel for more updates.